Hey, good afternoon. This is Trader Tim from EminiMind, and we're doing a trade recap for today's the 14th of October. It's Thursday, and really interesting kind of change of tone today. So we had the gap up this morning, and just a ripping rally the rest of the day. Rip, roar, and rally. Say that 3 times. And the interesting thing about today, or the key areas that makes today important is that if we look at, well, yes, we're at the 50% short again. And so, you know, you would expect if we were going to see selling pressure come in, that at this 44.20, that's where we would see it. You can see we touched here perfectly last week, and then before that, we had a pretty good chance of breaking out with breaking the 61.8 intraday on the ES here, but then rolling over. This was a couple weeks ago. So, each time we've come up to this 50% retracement, we've been met by pretty swift selling. And so far today, the market's just closed, and we rallied into the close. The other key thing to point out is that if you look at the down trend line from the last month and a half, we have now closed above the trend line and above the swing high. So you essentially have an inverted head and shoulders that's in the form of this kind of downward slope, and we have now just closed above the down trend line. If we look, just thinking back to some other individual stocks, Tesla was in a similar pattern like this, where it had kind of this down trend line, it closes above the trend line, and then it gets a continued run. You can kind of do that on any of these consolidations, if you will, where this one's not very steep. It's almost horizontal. But if you connect the highs like that, you break that down trend line and then you continue on yet again. So that's important to note that the trend line's broken, the swing high's broken, and we were not able to complete the negative 23% target yet. So I'm leaving these two drawings up, the 50 and the negative 23, but if we come up tomorrow and get some follow through, then we should be able to make it up to the underside of this trend line. The next thing I want to point out is that on the VIX, we have a really, really bullish condition where we're breaking down as the market is going higher, and the VIX broke down back into this mid-teen range and took out the swing low. So things are signing that there's more bullishness on the horizon. Now, breaking the 61.8 of the short puts us right at the underside of the up channel that we've been in for the last 6 months. So that will be a very telling point. I wouldn't be surprised if we get some selling pressure up there and pull back a little bit. But at this point, the trend is starting to break down. The downtrend is starting to break down. I did close out my puts on the gap up this morning. I had them from the 50% here. Anytime we gap up coming off of a short downtrend, there's a strong chance that we're going to rally. And so if we go to a 15-minute chart here, you see we gapped up, and then just following that first 15 minutes, we just tore higher from there. I'm not sure if everyone's platform is printing this this gap up candle, but as I was trading and watching here in real time, there we did just scream really quickly at the top of the hour, and so my bar has a big gap, and I really don't see that happening too much in the ES as far as gap's concerned. But I wanted to go back to a trade from Wednesday because let's see here. We broke in the morning. We started breaking down, and we immediately broke the low tick of the day. So we formed the low ticket lows, and then we broke immediately. And anytime I see that happening, where we make a low tick of the day and then we immediately follow up with a low, 30 seconds or a minute later, that's a really good sign that we're going to go into a continued trend. So when you have the market, opening, you don't have a lot of data to go off of other than the overnight price action. It's helpful to look at the low ticks and high ticks of the day. If they line up and there's a bounce or a sell-off at that point, there's a good chance that that could be the high or low of the day. But if you get a low tick and then you immediately get a new low, then you're looking at the market continuing in that trend. So as we head into next week, really good job numbers today. Not a super surprise as far as I'm concerned, just given the COVID Delta stuff the last couple of months. Makes sense that jobs numbers would kind of raise. But with good job numbers and good strong economy, that is leading to a more likelihood of a raised interest rate and slowing of the economy. So I think we're going to end up in the same spot, whether the market goes down from here or up from here and then down a little bit later. So if you have questions, drop them in the comments below. I hope everyone has a great rest of your week, and I will talk to you all soon.